The third method for calculation of goodwill is capitalization method. Now students, remember capitalization method is actually followed in two forms. The first one is capitalization of average profit. Capitalization of average profits. Let us come to various steps that are followed in this method, that is calculation of goodwill by capitalization of average profits. The first step is calculate average profits, which is equal to total profits upon number of years. Once we have calculated average profits, we will then calculate capitalized profits. Capitalized profits would be equal to average profits into 100 upon normal rate of return. Third step would be goodwill. Goodwill is equal to capitalized profits, that is step number 2, minus actual capital employed. In case it is given to you in the question, you can use it directly, but in case it is not given, then it would be a difference of assets and liabilities. Let us take an example to understand this and calculate goodwill by capitalization of average profits method. The profits of last 3 years are 50,000, 60,000 and 70,000 respectively. The normal rate of return in this business is 20% per annum. The actual capital employed is rupees 1,80,000. Calculate goodwill by capitalization of average profit method. So now students, let us calculate the average profits first. Average profits would be equal to 50,000 plus 60,000 plus 70,000, that is for 3 years, divided by 3, which comes to 60,000. That means the average profits for the business are rupees 60,000. The normal rate of return in the business is 20%. So capitalized profits would be capitalized profits are 60,000 into 100 upon normal rate of return, which is 20. So multiplied by 5, capitalized profits are 3 lakh. Now students, let us calculate the capital employed in the business. The capital employed in the business is given to be 1,80,000. So now we can clearly say that goodwill is equal to capitalized profits minus capital employed, which in this case is 1,80,000. So that would be 3 lakh minus 1,80,000. So capital employed is rupees 1,20,000. Or goodwill based on capitalization method is 1,20,000. The second part in capitalization method is capitalization of super profits. So now students, the basic step in this is to calculate super profits. We know how to calculate super profits. Let us discuss this again. The first step is to calculate average profits. Average profits are equal to total profits upon number of years. Once we have calculated the average profits, then we'll calculate normal profits. Normal profits are equal to capital employed into normal rate of return. Capital employed into normal rate of return. Remember, this normal rate of return would be mentioned in the question, and it represents the normal earnings in this class of business. So once we have calculated normal profits, then we will proceed to calculate super profits. Super profits would be equal to actual average profits as calculated in step 1 minus normal profits the difference of these two would be super profits. Then the goodwill of the firm. Now goodwill under capitalization method would be capitalized value of super profits. So goodwill will be equal to super profit into 100 upon normal rate of return. And again, this normal rate of return is what is given in the question. So once we have calculated super profits, we can put into this formula and get the value for goodwill under this method. So students, just to reiterate, under this method, we will first calculate average profits, which will be equal to total profits divided by number of years. Then we will calculate normal profits. Normal profits can be calculated as capital employed into normal rate of return. This normal rate of return is given in the question. And as for capital employed, if it is given in the question, that is okay. If it is not, it is a difference of assets and liabilities. Then super profit, difference of these two, and finally goodwill by this formula.